Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. While it's early Sunday evening, got back to Chicago for the holidays. Very cold here, dark, gloomy, but I wanted to go over my current buy recommendations. Not a lot of changes here, but let's get into it. First on the S&P 500, I'm not making a market call here. As I said last time, I'm neutral on the market here. We're going into bullish seasonality, but we do have a negative divergence as we hit all these higher highs. We have lower highs on our RSI going back to April. So at some point, we're going to get a correction. Can it eke out another month? Into the new year, certainly. Could it correct? I've seen that before too, where everybody thinks the Christmas Santa Claus rally is in effect, and then you get lower prices. And so I'm just looking at my chart here, and that's what it's telling me. Be careful. I'm neutral, but there are things to buy. First, let's cover a couple of commodities that I'm bullish on. Commodities have been struggling with the strong dollar. I don't know if that's because of the election. Everybody can speculate all they want. The dollar did break out of a bullish uh, triangle. So uh, Commodities have had a rough go of it. Not getting killed or anything, but they're consolidating still, like physical platinum, the ETF, PPLT. Here we are in the weekly chart going back to 2021 to three, about 3 years in the making, the symmetrical triangle, and tried to buy this a little bit early, unsuccessfully. We're down slightly. However, this past week, it came down and tested our stop at 85. And you can see prices began the week at the top of this bar intra-week, traded all the way down to 85, and by the end of the week was back up at the height of the week at 87, 87.06. We still got resistance here, however, with this confluence of moving averages coming in. Oh, and they haven't touched yet. So maybe in the early part of the week, we get some downward pressure, and by the end of the week, and these lines touch, and then we get some sort of a reflux rally back to the convergence. I don't know. So, I'm not strong by killing it here. Again, I do the same thing I always do. On up days, I sell a little bit. On down days, I buy a little bit. And that's what I've been up to. But I wanted to show this first. It's not because it's the highest conviction. I just wanted to cover commodities that I'm currently have a buy rating on. Copper, the ETF CPER, same thing. We made a ton of money in copper from here to here, bought it here, sold here, went down lower, came back up, got long here, and here we are lower again. Once all this happened, it came into focus that we're in a ascending triangle with a flat top and a rising support line. And so, more weakness is possible, down to the support line at 24.5 or so. And also, we have a confluence of moving averages, a rainbow convergence, a bearish rainbow convergence coming into effect. So, looks like 26.5 will be where they will touch. So there could be some weakness until that, and then we will get some sort of clarification. So on up days, again, I'm selling, sold a fair amount, and then when it's down, I'll buy a tiny amount, kind of doing that until we get some clarification. I would not be surprised if we saw a little bit of weakness here over the next few days, but if I wasn't in copper, but I wanted to own it, I'd wait until it broke through this confluence of moving averages So again, this is not one of my top recommendations. I have a buy on it. I think selling it because it might go to 25 would be uh, guessing, and I don't want to guess. I'm in it. I can handle on a commodity, um, you know, 4% or something. So that's where we're at on copper. Our buy stop is 24.5 down here. Let's see what happens. FXI, the China large cap ETF, as commodities go, emerging markets and China go. And as you can see, we've had some weakness over the last 1, 2, 3, 4, 5, 6 weeks. We got long here when it was going up. This was the biggest move. I thought I saw it on CNBC, which I don't really watch. I must have been flicking through stations. Please don't watch it. You'll get bad information. Um, it was the largest move in that period of time ever. So on all those weekly calls and even every couple of days, those calls I'm saying, are you selling? Are you selling? Are you selling? So now with this correction, I've been buying, 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 and I'm back to a pretty good size position because my stop here is at 29 and we're currently at 30.31. So the downside is limited. And you've seen the long big 20-year chart on the Shanghai index, which suggests we may get much higher prices. I want to stay with this. So again, this is a good place to buy, reward to risk. If it fails and it drops below 29, then I sell and I take my small loss and I crawl off into the corner and I say, gee, that was terrible. And then I move on to the next. But if it goes up from here, you'll wish you owned China. All the weak hands are folding now. They jumped on it way up here and now they're selling, collapsing into the lows, hopefully. So that's where we're at on China, large cap ETF. And here's the Tencent Holdings. This is a technology conglomerate in China. And again, we have, well, I don't know, it's not a perfect ascending triangle. It could be called a symmetrical triangle, but I'm going to call it an ascending triangle. A big pattern, a year and a half in the making. Again, a big breakout and then a retest of that breakout. So I was selling, here's where we bought. I was selling on the way up, and then I've been buying this lately a little bit less because it's a small cap company. Um, for a lot of reasons, I prefer large caps over small caps right now, and that I can't get into today. But our buy stop is at 50. So the downside, we've raised our stop from 45 to 50. So the downside is limited, and the price projection could be as high as 81. Reward to risk is very favorable. XLE, Energy, Spider, ETF, a big ascending triangle. 2.5 years, let's call it. And when we got the breakout, we bought that, went up, came back, retested that breakout, almost got stopped out of our stop at 88, but held. And then we've had some big up weeks, and last week we had a pullback of a little less than 2%. So, 115 is the upside price projection, which is huge. We also have a smaller inverse head and shoulders pattern here, which would be suggesting about 106. So right now, I'm good with this holding. Uh, Marathon Oil, our other holding, energy holding, uh, the merger was completed with ConocoPhillips, and I'll show you that briefly in a little bit. I put out a YouTube on Marathon Oil saying that it was done, the position was closed because of the merger. So this looks good. We're in the money, and all looks good there. Reits, IYR, bought it here on a small inverse head and shoulders pattern. Didn't wait for the larger one. and it went way up here. I'm saying, are you selling? Are you selling? Are you selling? Look how overbought we got on our RSI, but no negative divergence. And then we got a correction. I put my stop at 98. We slightly broke it. I was on the call saying, don't sell your position. We got to give it a little bit of room here. Sure enough, we got a rebound, and our upside price projection is 112, and our stop is still at 97. I really should lower that to 96 to the prior low. I'll do that my next update. So it looks good. Fixed income, bullish on fixed income and TLT in particular. This has been a contrarian call. Everybody's saying with the rising prices of everything and commodity prices that interest rates are going to go higher and all the inflation and da 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 da. Well, it hasn't really happened yet. So here's where we got bullish back on May 2nd. Sold it here, bought it back here at 92. It went down, didn't stop us out. And now we're at 94. We're breaking through a bearish rainbow convergence. So that's what we're hoping to see on copper and on platinum. So uh, the price projection based on this big inverse head and shoulders pattern is 115. So things look good right here, right now. And so I hope you bought that recommendation. We're in the money, looking good. The latest buy recommendation was Exelon, the utility company, EXC, got a big ascending triangle going back 2 years. We got the breakout on the retest. I bought that and suggested the buying of it. Went down a little bit lower. We had our stop way down here at 36, never got there, and now we've turned up from about 37, and I've raised my stop to 37. Price projection is 51, which is a lot higher, approximately 35% higher. Like it a lot. Here's Marathon Oil. The merger happened. It stopped trading. We did fine. Gold miners was the last one I went neutral on. We got stopped out here. Last week was an up week, but I did see that gold is down $25 tonight. So I'm watching this closely because this big pattern says we're still going to go higher, but from where? So if gold isn't going to go higher, I doubt if gold miners is going to go higher. So we're neutral on this. We're out of it. IBB Biotechs. Oh, I'm sorry, I didn't update the chart. It broke way through our stop. And now it's been on a rally the last couple months. So I'm watching this. I may come back to it, but I'm sorry, don't look at that. This is not a buy. We were stopped out of IBB at a loss. Marathon Oil, uh, was a gain because of the merger. It was stopped out, but we actually got stopped out for a loss. So thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. I think the recommendations have been solid. Have a great evening and hope you had a good weekend. Thanks.